Hello, welcome back to this week's market update. Today is April 22nd, 2024, Monday morning, and we had a very full week of important economic data, so we'll jump right in. Taking a look at last week's market performance, rising geopolitical tensions and stronger than expected US retail sales data weighed heavy on stocks leading the Nasdaq Composite, 3.8% lower last week, the S&P 500 1.9% lower last week, the Barclays Aggregate Bond Index flat for the week, and then the only positive index for last week was the Dow Jones Industrial Average, up almost 0.7% on the week. And that was primarily led by one ticker out of the 30 stocks that are in the Dow, and that was United Health Group, and they were up more than 12% last week. So being the largest stock in the index, that definitely contributed to the Dow's rise last week. Shifting gears into our economic data of the week, we got retail sales numbers for the month of March, and ultimately it led stocks lower, coming in much hotter than expected at 0.7% of a monthly gain. And what the Fed is probably hoping to see would be more in the range of like 0.2 to 0.4% of a monthly gain. Rather, we're getting a lot hotter numbers. You can see last month's was even hotter in February of the growth in retail spending, and they are trying to kind of gear us to a soft landing without having to cut rates too soon, cut rates too late, and ultimately kind of land the US economy from its very hot and growing status into kind of a little bit of a slower range as we try to get inflation under control. So that's why stocks were ultimately lower, as the Fed is hoping for more of a subdued growth rather than this very strong growth in economic data. Then when we kind of look at the data broken down a little bit more, you can see excluding auto, it actually was even stronger, up 1.1% in the month. And then looking at an annual basis, retail sales were actually up 4% compared to the annual CPI rate of 3.5%. So even inflation adjusted retail sales growth is quite strong. Moving along through our week, we also got some really great housing data in both the new builds and existing home sales markets. So looking at the new construction in residential housing, we saw building permits at 1.46 million in the month of March, which you can see is a bit of a downtick from last month. And then housing starts at 1.3 million, and that was actually 10.7% lower than expected, so not great there if you're looking to get a new house, a new build. And then we saw housing completions at 1.47 million for the month of March. So ultimately, kind of why are we looking at this? Why do we take a pretty consistent look at where the residential housing market is? Well, one, it affects the consumer greatly, and we see in the March CPI a 5.7% inflation rate in the cost of shelter. So inflation has been heavily skewed towards rising shelter costs, which, new supply obviously helps to alleviate some of the upward pressure on housing costs. And so when we see new supply coming in at a lower rate than what we had hoped, then that kind of puts upward pressure on what shelter prices might be doing. Although I will say this is all pretty much in the normal range of where we were pre-pandemic, not so much as in like the very low interest rate environment that we were in 2020, 2021, 2022 before the rate hikes. But it is really important to look at just to get a full view of the economy and where consumers are spending their money, as well as how interest rates are affecting different asset prices. Looking at the existing home sales for the same month of March here, those totaled 4.19 million as expected, which was down 4.3% in volume from February and down 3.7% in volume from March of 2023. We also saw inventory increase from a year ago at 2.7 months to 3.2 months. So essentially between these sales volume numbers being down as well as inventory ticking up, homes are not coming on the market as much, and when they are coming on the market, they're sitting slightly longer than they did a year ago. So that's quite notable, but there is still a increasing median sales price that was up 4.8% from a year ago at 393,500 for a median home. So overall, more stable existing home sales market, although it has been quite slow as higher interest rates have continued to slow down volume and activity in buying and selling. Also, last week we got some economic data on leading indicators or the leading economic index, the LEI, which is something the Conference Board puts out each month. And for the month of March, it came in a little bit lower than expected at 0.3% drop from a month ago. However, we have been trending up quite a bit, and that's starting to signal a recession if historical trends continue. So we saw that be true in the early 2000s, the dot-com bust. Then we saw that in the financial crisis of 2007, 2008, 2009, and even true briefly during the shortened COVID pandemic recession. So this is looking like a flashing recession signal, although we are in a very unnatural business cycle with lots of stimulus left over from the pandemic and just a very unique environment. So it's not a definite, but it is a concern we want to take a look at, as this is pretty much the same length that it's been in this negative territory as it was in the financial crisis. So just a very unique thing. And then we look at what's driving it in the month of March, what drove this decrease. We saw things like the inverted yield curve continue to weigh on the LEI, as well as things like consumer expectations for business conditions, building permits, and new orders all weigh down the LEI as well. One final piece of economic news from last week comes from the Empire State Manufacturing Survey, which is a survey that the Federal Reserve Bank of New York holds each month, asking manufacturers in the state their current business conditions and their expected business conditions, and just kind of the overall state of manufacturing based off of one of the most economically important states in the US. So in the April survey, we saw it rose to 14.3 here. You can see that in the blue line of current business conditions, and that came in lower than expected. So we have seen really a significant pullback in economic conditions in the manufacturing sector, at least looking at this metric, and we have yet to see much of a rebound. So again, we look at things like the ISM Manufacturing Index that has been pretty much mostly negative over the last year or two, and then other things like this show another grim picture of the manufacturing sector. So when is this going to rebound? We don't know. We don't know when this is going to turn around. Although the kind of weakness that we're seeing in the manufacturing sector is often associated with pre-recessionary activity. So you can see that in the 08-09 crisis here, how that's kind of trended down and where we are now. And that could be a structural change. It could be, we're outsourcing more manufacturing than we did in this time period, but we don't know where it's heading. So overall, just something to be aware of, that manufacturing has been continually weak in this economic environment. Thank you for tuning in to our market update this week, and we look forward to providing another update to you next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors, and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.